All right, this is Iman Mitchell here, back with a video on how to find the float of a stock. So first off, I'll tell you what a float is. It would help to know that. And then how to find it and why it's important as well. So first things first, what is the float of a stock? Well, obviously you can just hop on Google and find an easy definition. But for the sake of this video, we're going to say that the float of a stock is how many shares are available for trading. In other words, how many shares are available in this company for a person to buy, for you and me to buy. So obviously the law of supply and demand applies, where if you have a lot of something, the price really won't be that high. Of course, there are anomalies out there, but if something is very, very plentiful, then like I said, the number of shares are going to be easy to find, so anybody can get them. You're not going to see a lot of price action unless, like I said, it's an anomaly. But if there are not a lot of shares, then the probability of a stock spiking or rising quickly over a short amount of time is increased greatly. So let's get into what this actually means. I'm just going to show you two stocks, and well, actually I'll show you a couple that have to do with floats and how they apply to trading. So the first thing I'm going to take a look at is a stock that has tons and tons of shares, and that is Facebook. So I'm on this website. This is what I use to look up floats. Finviz, F-I-N-V-I-Z. It is free. Finviz.com. Just go there. You can take a look at some stuff. So right here, this is how you'll find the float of a stock right here. Okay, this number right here. 25.5 billion. Okay, so currently, give or take, you can always cross-check this against Yahoo Finance as well to see how many shares are available for trading. But as of this video, this stock has over 2.2 billion shares available to buy. But the thing is, you see how it's steadily been increasing even with all these shares. Now, it's not necessarily over a very short amount of time. Over here, they saw some crazy price action where it spiked up here back in February. Again, like I said, the float is the number of shares that are available. So why is float important? It's not absolute, but the lower the float number is, the more likely a stock is to spike. Okay, because there's not a lot. There's not enough supply to meet the demand of everybody trying to get in. So I'll show you a different stock here, one that spiked recently, SPU. Now, notice the difference in the span of from about, we'll say about the late July, early August. This stock went from $2 all the way up to $20. Okay, but let's take a look at the float. 1.2 million. Compare that to 22 billion or 2 billion, which is what we just saw with Facebook, to this one. Okay, now you see how this managed to spike in such a short amount of time, because and it could have been, news related. I'm not talking about rationale or a catalyst to show why the stock is actually spiking. I'm just talking about the importance of float on this video. If the float is lower, the probability of it spiking, at any given time, be it maybe they released a good earnings report, so now everybody's saying, okay, they got good earnings, or maybe they get a contract, or they managed to get a deal with a certain vendor. It could be any number of things. Okay, and sometimes there's not always news to show why a stock is spiking, but in your researching stocks, you want to take a look at the float and see how low this number is. Now, of course, like I say, the lower the number, the better. But sometimes it might still have millions and millions of shares. It might have over 100 million shares, and it can still spike. One that just spiked was, let's see here. Matter of fact, we'll go to the screener. We'll take a look at a couple of stocks here really quick, and we'll take a look at some floats and some charts here. So if we go to the screener, and we'll just take a look at the day's percent gainers. So we'll go to, it doesn't matter really the price, but we're going to go to change. Let's click change twice, and let's see some volume. All right, change, and actually, let me do this. Technical, let's see here. Oh no, here we go. Technical, then change, and we'll do up 10%. I only want to see stocks that have been up 10%. And then we'll put them in order of volume, how many shares were actually traded on the day. So right here, SE is the first one that we see. it's had a major spike. It was up 13% yesterday. So let's take a look at it and see if what the float looks like. So we'll open that in another tab, and I'll just take a look at a couple. By now, I think you already know what a float is. All right, so look at this. Okay, 690 shares, 690 million shares. All right, which is quite a bit. 690 million shares. I'm sorry, that they have out right now. Quite a bit. But let's take a look at a different one here. See another spiker. Let's try this one. Yeah, I've seen this before. SKLN. 71 million. All right, and this one had a major gap down, but it was up. Here we go. See how it spiked up in a couple days and went from, God, maybe about 8 cents, 6 to 8 cents, all the way up to a little over 25, maybe 26 to 27, okay, in about a day. So from 8 to 27 in a couple days is huge. Imagine having 1,000 shares or 10,000 shares at 8 cents, and then it spikes up to 20. All right, that's what, 13 cents you've made, 13 cents per share that you've made times 1,000. Obviously, you did pretty well if you got in and got out on that. But again, look at the float here, 71 million versus, like I said, the billion that Facebook had. We'll take a look at one more. There we go. Biotech's been moving pretty good here. Okay, so here we go. 15 million shares on CLCD. Went from 10. The stock price doubled, and it looks like a day. Let's take a look at the candle chart. And yeah, look at that major gap up from the 10s to the 20s in a day. All right, that is insane. But the float, 15 million. Okay, not a lot of shares. Not a lot of shares. So that's why you're going to see that gap. That's one reason, just one reason, not the reason, but one reason why you're going to see a major increase in share prices. Just not a lot of supply for the demand. Okay, so when you're looking at things to get in and get out of, I'm not talking about long-term investing here. I don't want you to get the wrong idea here. We're talking about straight day trading, in and out. You know, really not trying to hold too many things overnight or for a week or for a month. Just straight in and out. The lower the float number, the greater your chances are to see a sharp increase in price. You get in, get out, move on to the next play. So I hope this video was helpful. I'll keep some more content coming from you guys, and thanks for watching.